You're all about hawkish tones. The People's Bank of China is not only just the opposite, it's the exact opposite. Cutting key interest rates overnight after yet another string of disappointing consumer and industrial data. That's painting a gloomy picture of its economic recovery. Another pet peeve of mine, Eunice. That's why I said that. Anyway, good day to you.
Thanks, Joe. It's really good to see you guys. The May data was really suggesting to many people here that the bounce back that they were hoping to see become sustainable after the reopening because of zero COVID would be sustainable, but it really looks as though it could be potentially short-lived. All of the data pretty much disappointed. Retail sales were up 12.7%. Of course, this is compared to when a lot of people were locked in their homes. So it also disappointed. People were expecting much higher numbers. Industrial output, so manufacturing, not much of a relief, up 3.5%, but disappointed again, missed. Fixed asset investment also missed. What was interesting is that private fixed asset investment actually contracted. So that it suggests that the private sector is not doing very well, as we know from various regulatory crackdowns and uncertainty within the business regulations. Now, in terms of the property sector, that is a traditional growth driver here, not lending a helping hand at all. All the numbers were suggesting further weakness, investment, sales by floor area, new construction starts, funds raised by developers. And the number that people have been talking about a lot today, outside of the state media, is the youth unemployment figure. That hit another record to 20.8%. And it just really suggests that the economy is hurting here. Now, the policymakers, as you had said, Joe, had decided to cut a medium-term lending rate. This is after they cut two short-term lending rates earlier this week. And it looks as though, most people expect that we're going to see even more stimulus, which could start as early as next week. On Tuesday, there's another loan prime rate, which is a benchmark lending rate for households and businesses. And most people are expecting it to be cut by 10 basis points, similar to what we saw today. And possibly the one that's linked to mortgages, which is a 5-year LPR, that one could be cut by 15 basis points to try to get more people here to take out mortgages. But it's going to be hard to overcome given all the pessimism right now about the outlook for the economy here. Joe?
It's supposed to be reopened. So we took a wrong turn somewhere. Yep. Eunice, what's the problem? They'd have more kids, maybe.
The problem, I think, is that, there's been 3 years of lost income. A lot of people feel pretty poor here. Even though the economy bounced back, they're worried about the lack of savings that they have in their bank accounts. And then on top of that, you do have industries which are traditional growth drivers and you'd think would bounce back and start hiring like crazy, as they've done in other places, such as education or IT But there are just so many different industries here that have come under regulatory scrutiny, or just generally businesses are in the private sector are worried about where things are going and are not hiring, which is a huge problem for future growth.
What sort of input are they asking for? And I guess the question is, what does this actually tell you about how much this is needed for the Chinese economy?
Well, it's clear that the Chinese economy, the recovery is weak. It is stymied by weak confidence, and they are kind of puzzled about how to reverse this trend right now because any kind of bump that we got coming out of COVID-0 has petered out. We're going to get the data dump for May later today, and that is likely to reflect that weakening confidence as it relates to those economic numbers. And we could also get a rate cut on the one-year medium-term lending facility later today, so there could be some monetary policy moves, and essentially they're we've had at least, sources have said, we've had at least 6 meetings so far in the recent weeks that top government officials have called, just soliciting, the opinions of business leaders as well as economists, and also some of those foreign business leaders on what they need to do. Leaders press them for ideas on ways to stimulate the economy, no doubt, restore confidence in the private sector, and revive the real estate industry. And in response, sources are saying those gathered called on the government to make urgent policy revisions. Also, adopt a more market-oriented rather than planned approach to growth. And of course, all this sort of flies in the face of the mandate that has been laid out by Xi Jinping at a time when we are trying to weed through the ramifications of his simultaneous crackdowns on the platform economy, on property, on education, and of course, COVID-0, which was the big overarching dampener on the economy. And one credit analyst tells Bloomberg that, look, business leaders are scarred by those simultaneous crackdowns. So it doesn't surprise me that the government would solicit outside opinions on how to get some fresh ideas at a time, of course, over the last year, we've seen Xi Jinping, as he's solidified his grip on power, put the party in more positions of power rather than the state in controlling the economy. So this is a fundamental problem that the Chinese economy has right now, and it'll be very interesting to see how open the ears of the top Chinese government officials will be. It sounds like it's urgent, though.
So this is highlighting exactly what has been going on and what the concerns are. Obviously, it's been obvious for a long time now that there wasn't going to be any growth in China due to the massive crackdowns on the different sectors, and so it's very obvious that there's going to be very, very, very little growth, and there's literally basically not growing at all. So now the central bank is Xi Jinping is exploring what to do with the central bank and seeing if they can ease up on policy. Obviously, I don't think that's going to really cause any economic growth because they need to lay off industry. What caused the lack of growth was the fact that they were bothering companies and just randomly suppressing companies, basically. And until they stop doing that, they're not going to have growth, and this easing isn't going to do very much, I don't think. So it's not investing advice, but I don't think that the easing is going to do anything, and it's just really disappointing because every single one of the companies, like in the latest quarterly report, had such slow growth. It was absurd. It was like only like 1 or 2% growth, or it was like negative 2%. I mean, it was basically flat for all of them due to, I think, the crackdowns, because there's no more transparency, and so that's why they're not hiring, is because no one knows exactly what to expect, obviously. So it's hard to plan.